I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned into Traders Nation. Thanks for making us a part of your day. Don and I have got a fantastic show, a packed show, if you will. Jack Roberts, he's going to be with us. He's an option strategist at Simpler Trading. We're going to be talking about the Fed. They eased up after one round of quantitative tightening, and as a result, what does our January and New Year look like? So we're going to be talking with Jack about that. Plus, Don and I are going to be talking back on our charts, and our stock list is going to be these handsome charts of data centers, towers. Man, you have got to stay tuned for that and not miss that. So we can guess, stocks, and a whole lot more. Stay tuned. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation.
Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
There's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
Hi, I'm Steve Forbes, and you're watching Traders Nation.
Welcome back. You are tuned into Traders Nation. All right, so far so good, Don. Don, I got to tell you, our stock list been phenomenal. Phenomenal, Don. Data centers, towers, security, those are all on our list here today. We're going to be talking about those. Certainly, Don, let's talk about DLR, Digital Realty Trust, currently trading at $113.78 here today. All right, average volume on this, 1.3 million shares, 943K exchange in hand so far today, up $4. Don, look at that handsome, look at that handsome green candle on this one, Don, performing well after those earnings several reports ago. All right, finally over its 200-day moving average here today, Don.
Well, look, what can I say about data centers except to say they're going to be around? Big announcement this morning from Google. Google is going to be building out multiple data centers across the country, hiring more people, obviously creating construction jobs. Point is that Google, one of the leaders in the cloud business, building more data centers. And here are the data center companies. We've been following these for a while. DLR is one. 52-week high on the stock is 125. Stock's trading in here at around 113. And throughout 2018, some of these data center stocks got weak. Yeah. But they're certainly poised for a comeback, and they've been performing very well here over the past couple trading days here in 2019. DLR, put it on your screen. Yeah, totally. DLR is the Digital Realty Trust. Delta Lima Robert is the phonics for DLR. Should be there for sure. Next stock on our list, EGP, and that's Echo Golf Papa. That's East Group Properties, Don. Currently trading at $106.87. 28,000 shares exchanging hands. This is not a big, huge volume stock, but look at this good-looking chart here. Bring your charts up on this. Another one. Handsome stair-step climb here, Don. I love these charts, all right? Resting at these levels, you know, a little bit over a horizontal jig, resting at these levels for about a week now, digesting those steady gains that it's had over a long duration, a period of time, Don. Well, sitting around watching the markets can drive you crazy. Yeah. And if you want to sleep at night, sometimes you have to buy into some of these REITs that not only pay a handsome dividend, but they're certainly not as volatile as many of the higher technology stocks. So this is another one where if you glance at the 52-week high, $108.40, 52-week high. So we have a stock we're following that's in here at $107 today. So this is another one you want to keep an eye on. Slow and steady. Yeah, and this is slow and steady. Once again, bring these charts up on the EGP, okay? And all these, actually. Slow and steady. Look at that chart, man. This is the kind of stuff that builds confidence in a trader, in a long-term investor, even a short long-term investor, all right? Beautiful looking charts, man.
EGP should be on your radar without a doubt.
Yep.
Don, EQIX, Equinox and Corp, currently trading at $418.19. 107,000 shares exchanging hands here today, up 20 bucks. Look at the gap up. $20 gap up on this thing. Equinox, Don, your thoughts?
Well, 25 bucks to the upside today. Look, not unusual. It's a $417 stock. 52-week high on it is about $460. So off the 52-week high, but another one of these data center stocks paying a dividend, West Coast-based company, one of the largest around the world in the data center business. Here it is, Equinox.
Yeah, Equinox, EQIX. This is what I like it to see. I like it to stay at these levels, okay? See if it can hold these particular levels. Doing quite nicely here today. EQIX is a ticker symbol for that one, Don. Don, next one on our list, without remiss.
Well,
Core, COR, your thoughts?
Yep, well, there's another one, same thing. 52-week high, now it's down about 16 bucks off the 52-week high. However, as I said previously, some of these data center stocks were weak in 2018, but there's no denying that the data center business is going to be around for a long time.
Sure.
These are capital-intensive businesses, so it's not a cheap play to get into the business, and the companies that are in there control a lot of the properties around the country where these sites, where the build-outs are done.
Yeah.
So CoreSite's another one you want to keep an eye on. There's a bunch of them in here in the data center business. These are the ones we kind of have been focused on, but not a bad play. They all play dividends. This data center business is and is going to continue to be a spectacular business.
Totally, Don. Hey, so Don, just so folks know, if you missed our last edition of Traders Nation, we talked about data. We talked about how cash is out the door. King is now data, okay? And so data centers are here to stay. In fact, it's going to be a growth area to be in. And certainly CoreSite is going to be one of those companies we're going to be following along with that. Currently trading at $101.24, up $4 since we spoke about it last. I'm liking that, Don. Handsome stair-step climb again. Rested now. Looks like it's going to be on the move. Keep an eye out for CoreSite. C-O-R should be on your radar. C-O-R. Don, so talking about cybersecurity, we had it on our show last edition of Traders Nation. We're going to be talking about cybersecurity and data since it's all commingled, right, Don?
That's it.
Look at cybersecurity, CYBR, CyberArk software. All right, currently trading at $101.55. We brought it to you at 86 bucks, Don. All right, how nice is that? And that was just last week. 2.7 million shares exchanging hands on that one. 4 times the volume here today, Don.
Yeah.
Huge gap up today. What's going on with cyber?
Well, stock gapped up today, knocking the cover off the ball with earnings. Not too surprising. CyberArk is one of the leaders in the business, and this is another sector, this cloud security software business that is growing in leaps and bounds. And so there you have it. Yeah. We talked about it last week. I've been keeping an eye on this stock. And we talked about it last week, as you mentioned, at around 87 bucks.
Yep. And
so here today it sits at around 102 bucks, up $16 on the day. And by the way, I just want to call your attention to HACK is the ETF in that sector.
Yeah.
One of the ETFs, HACK. So the ETFs are baskets, but individually, this CyberArk Software Limited is one company we're keeping an eye on.
Now, folks that are watching and viewing, listening to Traders Nation, been following along for, 18 years, they're going to see a pattern here. What we're doing is we're threading this stuff together. You got these data centers carrying the data and storing the data, right, Don? And then you've got the towers, which are a part of transferring that data. That's one way, but certainly a part of that. And then, of course, the cybersecurity, keeping it all safe, at least trying to, Don. So folks will notice this thread that we're tying together on all these different sectors, but they're related to each other one way or another, and certainly security is going to be a part of that. And in the coming weeks and editions of Traders Nation, we're going to be talking more about security, cyber companies, okay, when it comes to protecting that data that's out there, not only for personal use, but also small business, Don, right? So
that's it.
All right, towers.
Yeah, these some of. I'm just going to say this is another spectacular business, the security software business.
Done.
Towers. Let's talk about the tower business. This is another one. Every day, Kurt, as we discuss these towers, each day that goes by, you hear more and more about 5G, and 5G will equate to more tower business.
Totally will. Towers, CCI. Top of our list is Crown Castle International. Don, I told you I saw a Crown Castle truck. There you
go.
Yeah, right on the freeway a couple months ago. Hey, so there goes CCI. Nonetheless, currently trading at $118.61. 291,000 shares exchanging hands here today. Stock's doing this horizontal jig right now, resting at these levels near its 52-week high. Don, and that 52-week high for CCI is right there at 119. Don, your thoughts on CCI?
Look, this is another business difficult to get into. They can talk all they want. Barrier of entry is extremely capital intensive.
Totally.
CCI has been in this business for a long, long time. One of the leaders in the trade. It's a domestic company. They're domestic U.S. only.
Yeah.
Stock in here at $119. And their towers are built. All they're doing now with 5G, for the most part, is add-on.
Retrofitting the technology. CCI, keep it on your radar. Coming up next, we got Jack Roberts. He's going to be with us here today. So we're talking about the markets here in 2019 and a little bit about the Fed, what's going on there with rates, how it's going to affect you, your trading, and your portfolio. Stay tuned.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning. Traders Nation live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have with us here today Jack Roberts. He's options strategist at Simpler Trading. Jack, welcome to Traders Nation. How are you today?
Thanks for having me. Good.
Good. Listen, so, the Fed eased up after one round of quantitative tightening. As a result, we saw a strong January. Now what, Jack?
Okay, so me and my colleagues, we were talking about this in, mid-2018. I said, if we do go, into that, changing of interest rates policy, then yes, we're going to probably start a bear market. But what I was saying was we might possibly see the biggest fake out that we've seen in a long time, and that's exactly what happened. So what happened was we saw 25% retracement across the market essentially in late December. Everyone was talking about it.
Sure.
But now Powell wants to play ball. Interest rates are going to stay the same at least, and also there's some talk about him being maybe not so consistent with his words, but right now I think the street and some of my other colleagues are thinking, okay, well, I think we've gone right back into a bull market.
Nice.
Now, with that said, we have seen a secular shift from monetary policy to fiscal policy globally. We have geopolitical tensions that are rising, back and forth with China. Global supply chains are changing. Technology is not going to really be able to, push the market extremely higher like we saw 2017 and 2018. But between valuations and these regulatory pressures that we're seeing, it can still be. The market's going to be a good performer at least through 2019, and that is, contingent on Powell continuing to just keep interest rates where they're at.
Right. But do you think they'll do that, though? Because there's like you said, there's this huge concern, we're gonna bring it up, all right, bring maybe a quarter point at a time, walk it up, if you will. And so that concern is that by doing that, it would certainly hamper buying power. But like what we're talking about now, I don't know if that's going to happen or not. Your thoughts, Jack?
I don't think it's going to happen. In fact, I'm not going to put out a percentage as to how, confident I am.
Right.
But I will say what we do know is, obviously, equities have been re-upgraded, if that's even a term, but they've been upgraded again. And so let's just talk about how much the interest rates are going to change things. Now, if they changed interest rates, last month instead of not changing them, the average consumer with $10,000 of debt on a credit card would maybe have to see, on an average, $25 to $50 added to their monthly premium. That's not really too big of a change. So, we're in an emotional state. We have the biggest transition of wealth coming out of the baby boomers. We have healthcare that has yet to explode, which we're estimating Amazon is going to pivot into that space. And right now, I think Amazon is even cheap at its levels. The other thing that I'm looking at is the big funds, at least the top 10 investment firms, are really leaning into any weakness. Okay, they have a lot of information, probably more than the average consumer, on what's going to succeed and what's going to fail in 2019. But I do know that based off of, the market environment, it's profitable for them to lean in to any of this weakness. And so I don't think interest rates change. I think even if they do, maybe a basis point or two, 25 basis points, or whatever. I don't think that's big. I think we might see just an overreaction, but we're not even close to a recession.
And I think consumer confidence is so high. As a stack and the buzz out there is so great with consumers. Even if I think the Fed's raised that, I think consumer confidence will probably chew through that unnoticeable. Your thoughts, Jack?
Absolutely. So I think the first thing that'll go is going to be consumer discretionary. Where do you not really spend your money most of the time? So, airplane trips, vacations, things that aren't really happening too often in each individual's lives. But other than that, dealer inventories are down about 80%. There's been debt. Okay, so let's talk about debt for a second,
Let's do that.
So, all right. So, a lot of countries on our planet they have their debt denominated in the U.S. dollar. Now, they may not have, their currency is not the U.S. dollar. So what does that mean? That means it's more expensive for these poorer countries like, Southeast Asia countries, a part of China, some Europeans. What we have is it's harder to service that debt. So we're feeding a back loop that's become unsustainable. I do know that, if you look at stocks and options, we always revert back to the mean, right? So if we, deviate from the mean, we'll always fall back to it. I think we're in cloud 9, but I don't think this comes to an abrupt stop. I think that globally, with a strong dollar, it's going to hurt. We're already seeing Europe, Canada, a lot of these countries really starting to find that weakness. I think Canada is a great example. Canada right now is the most cash rich it will ever be in the next 30 to 50 years. That's based off of population. In the 70s, they forgot to start having babies again. They don't have the consumer base to spend money and to create new markets. So we do have global weakness on the horizon.
Moments ago, minute and a half or 2 minutes ago, you mentioned about baby boomers, and I certainly want to touch on that because it kind of ties into our consumer confidence, right? Consumer-driven economies are great. Government economies, very bad. And so here we have this baby boomers, they're retired or retiring. And so, based on that thought pattern, they're not really spending that money, are they? So they're kind of switching. They're shifting their investment portfolios, aren't they, from spending to more of a income-based portfolio, aren't they? So wouldn't that hurt kind of that consumer confidence area?
That's a good point. Two things on that. So, yes, they are retiring, and there might be a slowdown of that spending, but spending power, it really isn't going to be affected. The thing that we have, kind of like the ace in the hole, right, is we have the millennial generation not only creating new tech and new markets, but we are creating products. We're consuming more than any other generation, and we're going to be able to be large enough to take care of the retiring baby boomer generation. Now, I don't think that the baby boomer generation is just going to stop spending money. I think what you're going to see is an increase in subscription services. You have Amazon already. You have some other subscription services that are well groomed, and I think just as long as we don't have some type of weird crash in the dollar or some type of, Powell's not going to come out and raise interest rates, extremely large and surprise everyone, and then all of a sudden we're all doomed.
Right.
I think, I think the baby boomer generation I think the spending, at least from some of the colleagues of mine on the street, we're thinking it stays about the same.
Yeah.
Because what you have is there's a weird thing where we do have that opportunity gap and we do have a wealth gap based on just how our economic structure has been formed over the past 20 or 30 years. There are going to be some people that hurt from this. There are going to be some people that thrive in this. The people that have thrived so far are the people that have been in the stock market. So yes, I think it continues to be a difficult environment depending on how old you are. But overall, we're not seeing a stopping in consuming. We're actually seeing growth. I'm not really sure how accurate the GDP numbers are right now, and I also hesitate to say how confident I am in this unemployment number. Let's talk about that for a second. The unemployment numbers that everyone's hearing about is not considering the what do they call that?
One moment. We're out of time. I tell you, we're up against a hard break. Jack, I wish we had a ton of more time because we got so much ground to cover. But where can we find you regardless?
Absolutely, no problem. You can find me at simplertrading.com/traders.
Stay tuned. Welcome back. You are tuned in to Traders Nation. Great segment. Man, I could have done a whole hour with Jack, right?
That's right.
Right, Don. Great information. We're going to have Jack back on. He's over there at he's an option strategist over there at simplertrading.com, simplertrading.com. Go over there, check him out. A lot of great folks we get from Simpler Trading. Good information, man. All right, those guys, they know what they're doing over there, guys and gals. Hey, Don. So I want to come back and kind of focus on, we're talking about data, we talk about towers, but certainly in the coming weeks we're going to be talking about security. Very, very important, not only for personal but for businesses. Data's king. We talked about this. That's where the money's at. You got fraudsters and bad guys out on the beach somewhere in South America pinging into your accounts. And that's where the easy money's at. All they have to do is get it once, Don, is what they're saying, right?
Well, it happens every day. You hear about, another security breach at a large company. If you in our day-to-day travels, you hear it all the time.
Sure.
Somebody's bank account was broken into, et cetera. So these security companies that are publicly traded that we're beginning to follow, and I've been following them for a while.
Sure.
These are important segments of the market, and some of these stocks are really high flyers. Another one I'll be talking about when we do next show will be Palo Alto Networks, which is another one.
Nice.
PANW. That's one of the leaders in the
PANW. All right, Don. Do you own any stocks we talked about today?
No,
right.
None.
I don't either, and they're not buy or sell recommendations. You need to know that. Hey, Don, they can check you out at all the social media. Same here.